Black Friday for Amazon. We're going to talk about Black Friday, obviously, and what it could mean for Amazon and the stock. We're going to talk about it right after the buffer. So, I'm shooting this video right now. This is Thanksgiving Day. And so tomorrow, it's dubbed Black Friday. We're supposed to get all these sales tomorrow where we'll be able to, you know, consume, do what we do best. And but something is being planned now. Whether it's going to actually be carried out is something else to be seen. Right now, it says Amazon to face protests, strikes in 40 countries during Black Friday sales. Employees across 40 countries plan to plan protests and walkouts during Black Friday sales, according to a campaign called "Make Amazon Pay." End quote. Workers in the US, UK, India, Japan, Australia, South Africa, and throughout Europe are demanding high salaries and better working conditions. Workers decided to protest on the busiest day of the year to make their voices heard. According to Bloomberg, the movement is being coordinated by the International Coalition of Trade Unions, UNI Global Union. Protests will occur in more than 10 cities across the United States, including New York. In addition, labor unions in France and Germany plan coordinated strikes in 18 major warehouses. And the article continues to go. It talks about, also says Amazon could cut about 10,000 jobs in its retail, devices, and human resources division. And so we could get a shakeup maybe tomorrow, right? So that's the news headline. So what I want to talk to a little bit more about, so the tie into Black Friday, right? That's our article, that's our headline, that's our news, which our fundamental catalyst for what could take place tomorrow in the market, right? Now, what I also want to do, now with that being said, that so that's giving you the news, right? That's putting the fear in you, or whether it be fear or greed, telling you like, hey, this is what could happen. That's your grab you headline. Now let's go look at what the actual market is saying about it. We're gonna go to the trade tab. Here I'm on Thinkorswim right now currently. We're gonna go now, look at Friday. You see Friday up here where it says weeklies. You go all the way to the right, you got the expected move. So tomorrow, with this news headline coming out, the expected move is $1.52. So even with that headline, like that grab you, got you headline, the market is saying, hey, go up plus or minus $1.52. That's the expected move. Now that's not saying that it can't go up more than that or down, but the market is saying this is what is expected for tomorrow. These platforms are telling, so basically that's a one standard deviation move for tomorrow, $1.50 up or down. It's not telling you which direction, but it's telling you what's expected, what's the average, what is what would happen approximately 68% of the time. Now, so what would you go on? Like if we seen that, you just read that headline, you like, hey man, we're gonna get a down day. It still could happen possibly, but we're gonna get this down day. I'm gonna come out here and I'm gonna short right out the box, right? But the market is telling you, yeah, but the option market is saying, hey, with all these contracts, like you can see all these contracts on here, all this open interest in Amazon. Based on the option market, it's not showing that we're not seeing a big move. So this is kind of tie into um what you believe and what you know. And so what you believe could happen, could cause you to lose money. Well, why not trade on what you know? And you say, what do you know? We know what the expected move is, right? So I'm not expecting a big move tomorrow. If I was day trading, I'm not gonna get a big move here. Or I don't think that I would, so I probably would stay out of this market. It'd probably be chop chop. It's only gonna be half a day trading. So is that headline really something worth? Now I grabbed that headline off of um an investing like platform. Um so so what do? You trade the news or trade what you know. Trade what you know instead of trading what you believe. You can also I also use this type of thinking in my life. You know, a lot of the smartest people in the world, or what we deem to be smart, these people tend to be very very good at math, very good in science, because scientists and mathematicians, they don't operate on belief. They're not waiting on something that they can't prove to come save them. They rather depend on what they know. Belief will get you started. You need to believe you can do something. But after you do it for a while, you start to know, you be like, well, I know if I continue to do it, then I'm getting better at it. And knowing that a certain amount of hours and time put forth into something makes you better at it, right? So trading belief versus what you know. So I'm tying that all in together. Now let's go to the charts. I'm going to pull up on the chart something called a probability of expiring cone. Right? We're gonna come up here. I clicked on this little flask or beaker, whatever it may be called, and we're gonna pull up a probability of expiring cone. And we're gonna apply this to our chart, and we're going to look at it. And I'm gonna come up here on this little cog, this little gear, and I'm going to come to the price axis, and I'm gonna put fit studies apply, because I want to be able to fit it so you can see it. Now, let's look at this. This probability of expiring cone is showing you, so this 105.39 and 84.24 is one standard deviation away from where it's currently at for the next option cycle, or this current one. And we're looking at the monthly. See, December 22nd, excuse me, December 16th, 2022, 22 days from now. That's if you go +8 or down, so it's plus or minus $8 on the expected move, $8.43. That's gonna put you right here. That'll put you right around 105. Excuse me. It's off a little bit. You see, it's about, looks like it says 105.39. You got 84, and so that's about $10. And that's probably, to be honest with you, because the market is closed today. So it'll be, and this is showing you what the numbers was when it closed on at the end of the market yesterday. So it's off by like $1 or two, something like that right now. But that'll come in line when the opening bell opens up on Friday morning. You'll see this be exactly matching the expected move for what you see on the option chain. So these will update. Now, what that is saying is that the market, anything that happens in between here, it could go here, 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 here. It can come up here, come down here. But when the market closes on December 16th, anything, long as it's within this range, that's normal. That's something. So how could you play that investment wise? Just knowing that. So if you bought Amazon and you say can you handle a plus 10 or $11 move in the next 22 days? Or if you wanted to go out further, you say, well, man, I trade on the further. I'm a long time investor, man. How far you want to go out? How far you want to go out? They got these math models. How far you want to go out? You want to go out to January, 57 days? Oh, there you go. $13 plus or minus. You want to go out 85 days, $18. So can you handle an $18 move if we keep going? The further we can go out on this cone and we can continue to look. So they're showing you what a normal move would be in this stock. Now, I will add this caveat in. It is the more accurate, the more liquid the stock, the more accurate it's going to be. Meaning the more trading activity that you have in that particular stock in the options market, the more accurate it's going to be. So then someone will say, well, man, I don't, I just trade the stocks. I don't trade them options. So that shouldn't matter to me. No, the option market controls the stock market to a degree. Is the you have trade. This is why they don't talk about this on news networks. They're not gonna give you this type of information. They just gonna have you think that you believe the stock is a good stock and it's gonna do what you think it's gonna do. It's a reason why all these good stocks are down. Every last one of them are down the same. It doesn't matter. Look, it doesn't matter how Amazon come to my house. I know once a week, at least once a week, they dropping something off at my house. And everybody I know got an Amazon Prime membership. So Amazon not missing out on any money. So tell me why it went from 188 down here to 94. The best stock in the world, where if I do a video on Tesla, it's one of the best videos. I might just start doing videos on Tesla. Tell me why it went from 414 and it got cut and over half and it's down at 183 currently right now. Tell me why. The fundamentals didn't change on the stock. Is If you look down here at the bottom of the screen, we can look at the earnings. It beat earnings. It beat it back in October. It beat it back in July. It beat earnings back in what's that? Is that April? It beat it. It's just been beating earnings. So why is it going down? Because it don't matter. The news don't the news don't matter. The Federal Reserve is raising interest rates. Interest rates go up, assets go down. Interest rates go down, assets go up. It's a simple formula. So we can look at you can look at all of what you believe and then just go on what you know. And you can do this on any liquid stock. Any liquid stock. In the next the same time frame, we can go look at trade December 16th. We're going 22 days. We can go 57 days. We'll go out to January 20th. A normal move will put Tesla at 235 and 136. They're saying, yeah, in the next 57 days, it would be normal. It would be within one standard deviation of one sigma move if Tesla went down to 136.35. That would be like normal. It would be like, oh, okay, that's no big deal. So why aren't they making this known when they're talking about this on the news? Because if the average person, you buy 100 shares of Tesla at 183 and in 2 months it's down to 136, that's approximately, we just round it off and say $50. To be exact, it's probably like what, 47 or something like that. That's $4,700, right? So if you can't handle a $4,700 swing up or down, whichever way, because you can short too. If you can't handle that, then you probably should not make that type of trade. Once again, this is going by what you know. The the technology that we have now, you don't have to trade on a belief anymore. You can literally say, okay, you can use math to help you make these trades. And and I hear sometimes, well, nobody knows. You may not know exactly what's going to happen, but you know what's expected, and you can trade around what's expected. Like, it's you ever like to the people out there that bet, like you bet on football games. You ever notice how the NFL games, them lines be real good? Like it'll be a 3.5 point. One team would be a 3.5 point favorite, and that game would be come down to a field goal at the end, and it'll be 27-24. And you'd be like, man, that line was right on. And you had that half a point. That half a point mattered though, didn't it? It was close. That's because the technology for coming up with this stuff is jam up. So why not use it to help you in your trading? So once again, just to recap a little bit, we got some bad news in Amazon, but the market isn't telling us that we're gonna get that much of a move. Now that could change, right? Um, but you can always put probability of expiring cone on your chart. And if you're somebody that's like, hey, man, I don't have this downloaded on my computer, and because I try to make this channel for beginners, and so maybe this is a little bit more technical. You can always look at the expected move. I use TastyWorks and I use Thinkorswim. Both of them have the expected move for your particular option that you want to trade. And even if you're not going to buy and sell an option, use these expected moves for your take profits on your stock buying. If you gonna buy a stock, you say, man, I'm taking a year outlook on Google. Okay, I'm gonna go out 421 days. January of 2024. What's the expected move? $142. Okay, plus or minus. Now, what also I want to make it known is $142. That's also saying that it could go down $142, right? So but they are less accurate the further they go out. I will say that these particular numbers are more accurate within like right around like 90 days and under has been my experience. I tend to use expected moves around 90 days and under, and I use it with real liquid stocks. So your FANG stocks, Meta, Apple, Amazon, Google, Microsoft, Tesla, Netflix, Boeing. Well, Boeing ain't considered, but Boeing is a liquid stock. Caterpillar, like your S&P 100, all of those are pretty liquid. Um, and maybe even some more in the Nasdaq 100. But your stocks that everyone trades. So with that being said, guys, I don't want to make this video too long. Trade accordingly, know your risk, be comfortable with your risk, and listen up. I'll hit you with another video tomorrow. We're gonna talk a little bit about tomorrow's video. We're gonna see, because it's gonna be a light day tomorrow. I don't expect a whole lot. In my opinion, I wouldn't be doing a lot of day trading at all. Whatever you have, just kind of, I would sit with it. But who knows? We might get a big move or something at Amazon. It's possible. It's not. I'm not saying it's not possible, but it's not probable. And with that, guys, I'm gonna be out. Peace.